I do think they're generally on the right track. I think as they look at formulating their policies and announcing the budget later this year, I think as a communication matter, it's important to reiterate what objectives they have for the country. You know, we're a country hovering at around 1% growth. What is our capacity? I think it's much higher. Is it 1.5? Is it 2? Over what time period? How do we unleash productivity in this country? Now, we're sitting here in a hub of productivity. I'm sure we're going to talk about that. But that has to happen elsewhere in the country. And then what policies need to take us there? I think they're on the right track. I think needs to be articulated and sold more.
Look, I can say something that perhaps you can't say, and that there is a constituency who think the best way forward is to milk the financial sector, is to absolutely take an extra pound of flesh out of the banking sector. These are my words, and I can say it because not only am I a journalist, but I'm also long in tooth, old enough and long in the tooth, so I can say what I believe about these things without worrying about the political consequence. Do you think the big danger in this budget is that the government is going to milk the banking sector and actually that's going to extract growth from the UK rather than drive it?
Yeah. So I hope it's not a big danger. I think the government has been very, very clear in its support for the financial sector. This government has since the day they came in. I've said I felt it the moment they walked in. I feel it today. Just yesterday, I think the Chancellor was here opening a new building for one of the fintechs housed here. A year ago, she was...
may or may not in the future be a rival.
But look, we welcome the rivals. I mean, competition is an important part of growth, which is why actually milking the financial sector is not good, because it stifles investment, it stifles competition, stifles growth. We are sitting in the financial heart of London. London is one of the two great financial centers of the world. You need to encourage it to grow, not tax it out of existence.
But Venkat, we know that Rachel Reeves, the Chancellor, she's got limited options here. She's got those really strict rules, so there is an expectation that we are going to get higher taxes. So with that in mind, I'm curious as to whether you would ever consider moving your headquarters out of London, because if you went to somewhere like New York, for instance, you could probably double that share price. So, you know, in terms of attracting a higher multiple there, I mean, is that something you'd ever consider?
Well, I'm very happy, first of all, with our share price performance this year. Second is we are a proud 335-year-old bank in London. We moved from 54 Lombard Street, where we were for centuries, here to Canary Wharf about 20 years ago. We are very happy to be here and happy to be in London.
But, you know, the UK does face a higher tax than other countries. So how are you going to mitigate the impact of that? How are you going to be able to compete globally with other institutions, the US banks in particular?
So I think that's why it's very important to have a harmonious, consistent approach to bank regulation, bank capitalization, including bank taxation. Because we are competing with the world here. The companies here are either American companies, French companies, British companies based here in Canary Wharf and based in London. And some of them are fintechs which are looking to grow around the world. The world is our oyster. The UK is our home. And we've got to work with both.
We've been talking about the macro issues downwards and what the government can do to help. What about what you guys are doing over at Barclays to face that enormous competitive threat as well? I mean, there are various parts of your business, consumer-facing, corporate-facing, and IB as well. I mean, talk to me specifically maybe about the IB and how you are navigating markets at the moment and growing the Barclays franchise in what is a very competitive environment.
So the investment banking market is very competitive. We are the biggest non-US investment bank. We have a huge presence in the United States. I think that's a great strength for us as the American economy continues to grow.
Have you got the scale you need in the US?
Absolutely we do. We are, over the last 5 years, the biggest financier of debt for the GSEs, Fannie and Freddie. We are among the top 3 broker-dealers, primary dealers for US Treasuries, financiers of US Treasuries. We are deeply integrated into the US financial markets and a big part of many of the important transactions that take place. Absolutely we have scale. To answer your question, we grow by having good people, offering competitive service and high quality service to our clients, and to serve them across a host of products. Our biggest clients are the very biggest American firms.
But can you really compete with US banks when you think that they've got a much less stricter regulatory environment than we do here in the UK?
Absolutely we can, and we're competing every day. Because price is one part of it and what you can charge. Ultimately, what this means is that you've got to pick your spots more carefully, which we do. Second is that you compete by offering good products, good service, and clients want the things that Barclays is able to give, which is this enormous strength in equity and credit markets, and at our size, the ability to work seamlessly across the bank.
So Venkat, let's talk about your 3-year turnaround plan, because we're like over halfway through into it now. So how is the execution of that going? And from speaking to analysts, what they're saying is that they're actually already looking towards the next strategic plan now, because you're pretty much on track with that. But what do you, in terms of the new targets, are you going to announce them straight away or in advance, or will there be a gap? And importantly, are you going to be overseeing that next strategic plan?
Well, lots of questions. First of all, I'm very happy with the progress. As you say, we are well over halfway, and we're going to have our results in a few weeks. I think what I would say is that we are pleased with the progress. We know we have to announce new targets. We're going to do that before the current targets run out, which is at the end of next year. But I don't think we're going to have to wait that long. It's not going to happen overnight, but it'll happen soon enough. There's a great... What I've said is what I've learned in the last year and a half with this turnaround plan is what great capacity and potential there is in Barclays. And what we are spending our time now is to try to analyze that potential domestically and globally, quantify it, size it, and then convey that in the form of targets to the market.
Is there any way you feel you're undersized where actually you could go back on the I mean, we've talked a lot about M&A in Europe and or globally, and it has happened in some cases, hasn't, but is there any way you feel you're undersized where you need to grow and you can't do it organically?
We've always said that it's an organic plan because you've got to assume that you don't know what's available.
Of course, we know a Spanish bank was selling assets. I know you had a look at that one, but it didn't quite come off.
So when we look at an acquisition, we look at three things. First of all, does it add size or does it add scale? I mean, size or capability, and is it at the right price? And can we integrate it well? If we don't do something, it didn't meet all of those.
So speaking on M&A, I mean, you've said that you're interested in maybe potentially a small bolt-on acquisition, something maybe similar to TSB. Were you in that running for bidding for TSB?
Yeah, so I'm not going to comment on specific things.
Of course you're not.
I'm going to say
three criteria.
It did not meet all our criteria, is the way I'd put it.
So what would you be interested in looking at? Something like TSB, a retail, or would you even be looking at something into private wealth? What are the opportunities that you see when it comes to M&A?
So it's really very simple. I go by principles. Does it give us scale? Yeah. Does it give us capability? Can we integrate it well? And is the price right? If something fits all of those, we'll look at it. Yeah. Not very much does.
I know a lot about your fintech offering, but do you feel that that's somewhere where you need to bulk up, given the fact that there are some threats on the horizon, in fact, just behind us on the other side of the wharf?
Well, the good thing about being in Canary Wharf is you can look at all your competitors without staring into the horizon. They're right around you. Yeah. I think we can. I think the important thing, and look, all the big banks are doing this. Yeah. What many of the fintechs have done is prod us, push us into being better in our pricing, better in our service offering, more nimble. Yeah. Now, we have to do it within a constraint of very important regulation, which I deeply support. And I think, therefore, we are in the end, as licensed banks, safer places for people to keep money in than people who are not, and we offer all the ways in which to move money and to manage your money. Banks do three things. We store your money, we move your money, we lend you money.
And hopefully you make us money as well, not just yourselves. Look, there was a great report which ruffled all kinds of feathers. And in fact, did you know that Venkat is the only FTSE 100 CEO who went to MIT? There were two, and I spoke to the other one yesterday, Mr. Sir Nigel Wilson.
Sir Nigel Wilson.
There's only one at the moment as well. Yeah. MIT put this brilliant report out, and obviously there was a bit more nuance than the headline, but the headline said 95% of companies are not realising ROI from AI. Yeah. Is Barclays moving down the right road when it comes to their AI adoption?
We're moving quickly, and we're trying to adopt it broadly and in a few areas deeply. The question of what is the right road is something that we're all figuring out. I think the right road is not so much the technology choice, but the process transformation. So pick the technology quickly, but work hard on the process transformation, which is hard. That's what we are trying to do.
Yeah, great.
And I want to talk about a bit, you talked about wanting to diversify into other areas in addition to the investment banking. So how is that going? Are you still on track with that?
Yeah, so the biggest area where we wanted to grow is right here in the UK. We said over this 3-year period, we'd add £30 billion of risk-weighted assets in the UK or UK-related businesses, which are in our retail bank, our corporate bank, and wealth. In our mid-year earnings, we were well over halfway at £17 billion. So I feel it is going on track. Yeah.
The investment bank, you really capitalised on a lot of this market volatility. How do you intend to do that as we start to see maybe things stabilising towards the end of this year, 2026 as well?
So there are two ways. First is what do we do within the investment bank, and second, the investment bank is part of a much larger business, which tends to move in different cycles. Within the investment bank, we try to create a great amount of our revenues from what I would call relatively stable businesses. In the markets business, it's financing, equity financing, fixed income financing. We're a leader in fixed income financing, and that contributes about 30-ish% of our revenues. In banking, our transaction banking offering and our corporate banking offering are really important, in addition to the more episodic, sexier revenues from equity capital markets or M&A or LevFin.
I want to go back to, and we had a great deep dive into what you see as the focus for Barclays as well. I want to go back into the broader UK story, if I may, as well, and what the oscillation, I think that's an understatement, that we've seen in the financing markets for government, for treasuries, for gilt markets, what it's meant for you, and your concerns about what it means for your clients' fundraising as well. How difficult has the sneak peek that the vigilantes have had a look at the gilt market? I wouldn't say they've declared war on it, but it's certainly been a more interesting time. What has that meant for how you have done business in the UK?
Well, first of all, we are a very active force in the gilt markets, helping to finance the government on the one side, working with the debt management office, and obviously trading gilts for our clients. I think one of the important things to note is, first of all, the financing of gilts is robust. Auctions, there was one a couple of weeks ago, well subscribed. Well subscribed. Second is the gilt market is an open, well organized, well constructed market without a lot of it being held in mom and pop hands, unlike some of the European markets, which is what gives it the liquidity and the ability to move. It has moved largely in sympathy with global rates with a slightly higher beta. What we would say is if US rates moved by 1, gilts moved by 1.5. Part of it has to do with the maturity profile of gilts. There are more long-end gilts. The maturity profile of the UK gilt market is around 14-ish years, whereas in the US it's about 7 years. That's the success of the UK. They borrowed more, longer when rates were low. That was a good thing to have done. I think the volatility now is a side effect of that, but I think the cure to all of these things is good economic growth, good economic fundamentals.
But there was a nod, wasn't there? Sorry, there was a nod from Andrew Bailey and the MPC last week to that oscillation by a tweak to the QT policy as well. That was a nod to the fact that there is a bit of concern out there as well. Do you think that the bank, in working with yourself and others as well, has added that extra bit of stability to the gilt market that was needed?
So I won't comment on a specific policy. I think they do quantitative tightening as part of overall, or easing as part of overall monetary policy, and you have to look at it that way.
Not as fiscally supportive policy as well.
Well, the Bank of England is independent as it rightly should be.
Is it completely independent, Venkat? You and I could have this conversation.
I believe it is, and I believe it's a good thing that it is. Okay. Right. And I think both in monetary policy and financial regulation, that independence is really important. It's what keeps London a well-governed and robust financial centre. I'll be the first to advocate it. This entire area depends on that. Yeah. I think there are always things that happen on the side that affect supply and demand at a point in time. That QT was one of them. Yeah.
So on rates, sticking with that theme, we talked about the long end and the short end. I want to talk about Barclays' sensitivity to the interest rate story, because it's often said that the argument has been that if rates stay in between that 2 to 4% range, that is a sweet spot for the banks. Do you agree with that statement?
Yes, depending on how they manage their interest rate risk. So volatility in interest rates is always something that banks worry about. I've been in the fixed income markets for over 3 decades, and I hate risk. So one of the things we try to do is to manage our interest rate exposures by having what we call structural hedges, which basically try to smooth out the effects of interest rates. So it's fine if it's in the sweet spot, but if it moves, our earnings are fairly stable.
But to what extent, quickly, is that structural hedging actually offsetting the pressure that you're getting from lower interest rates on your net interest margins? Because at some point that's going to end.
It offsets it considerably. And that's, I think, part of the reason why we do it.
I've got to finish off with one area which I'm sure your team will love you to talk about, and that is about public sector pay. Because you've ended up in a row with the TUC, and it doesn't surprise me that the puerility of the argument from one side, because they don't like the fact that rich people are talking about the need for productivity in the UK. I know what you earn because it's public information. I also know what JP Morgan's CEO earns because it's public information. So why the TUC is unable to look at transatlantic salaries rather than just UK ones, I don't know. I'll park that idea as well. But do you think that people like yourselves are being shut down by the left in having a constructive comment on productivity and wages?
Well, first of all, I was trying to participate in a broad discussion on economics and economic policy. One part of it was reported. I think the important thing here, without wading into any particular topic, is that this government, every government around the world, has faced an energy price shock, faced a defense price shock, facing tariff shocks, and the global macroeconomic picture is changing. Every country has important and tough choices to make on spending, on investment, and how to drive growth. Right? No choice is easy, and lots of things are on the table. And I think that's why we've got to be supportive of our government here in the UK and elsewhere, trying to make those difficult choices, because the ultimate goal is something that helps all of us. And that's what I'm behind.